Hello guys, you're welcome to this edition of Market Overview. I am Andy Nixon Chair, Chief Market Analyst and Strategist of ANC Trading Community. On today's market view, we shall be looking at three different arms of the stock exchange market. We shall be looking at stocks, we shall be looking at bonds, we shall be looking at Forex, also known as the foreign exchange market. When we talk about stocks, what do we really mean? To become an investor, to become a fund manager, you need to understand that the financial market is very broad, and understanding the different arms of the financial market before getting into it is very important. So how does the financial market operate when it comes to these three different arms? When we talk about stocks, there is a difference between the stock exchange market and a stock. A stock is simply a share of a company that has been listed in the stock exchange market. The stock exchange market in itself is where companies go to list their shares to raise capital. For example, a company needs capital to expand, a company needs capital to promote its product. For them to be able to raise capital from the general public, they need to be listed in the stock exchange market. There is a legal procedure for a company to be listed in the stock exchange market. For you to list your company or raise capital from the general public through the stock exchange market, you need to be a public limited liability company. Nonetheless, private limited liability companies have the ability to fund stock capital through private listing or private invitations. We won't go there today. We shall be focused in the stock exchange market. So when we talk about stocks being listed in the stock exchange market, for example, we have Google, we have Netflix, we have Amazon, just to name but a few. These companies need capital to grow. This company needs capital to inject in the different projects they are carrying. And for this to be possible, what they do is they list their shares in the stock exchange market that you as an investor can invest in it directly. So how then can you invest in the stock exchange market as an individual? How can you invest in the stock exchange market as a trader? The first thing you need to understand is how the stock exchange market operates. You need a trading account. Now, you can open your investment or trading account through what is known as a broker. We shall be looking at that also in the days ahead. So our focus today is letting you understand the difference between the stock exchange market and a stock. What is a bond? A bond is a debt instrument used by companies, used by institutions, or by the government to raise capital or finance from the general public. Bonds operate in different categories. We have 1 year bonds, you can have 2 months bonds, you can have 6 months, you can have 10 years, and you can name the rest. Now, a bond is a certificate that is issued by an institution or by the government for a period of time in return of interest rate. Now, different bonds have different returns on their amount depending on the duration. As the government issues a bond to the general public, individuals or investors can purchase those bonds, hold them, and retain get returns on their investment after a period of time. Now, bonds can be transferable. You as an investor, let's say you invested in a bond that is term 5 years. Now, within that 5 years period, you can sell your bond certificate to another investor if you won't want to hold the certificate that long again. You can sell it now at a discounted rate. Another aspect of a bond that you need to understand is that bonds can also be discounted. You can go into an institution to discount your bond before time. We shall be looking at this more in details in our next episode. So let's take a look at the foreign exchange market. What is Forex? Forex is a short form of foreign exchange. As an investor, as a businessman, as a traveler, before you travel out of your country, you are already participating in the foreign exchange market. At the time when you travel from your country to another country, you exchange your base currency to the currency of the country you are getting into. Within that period of exchange, there is what we know as a devaluation or an revaluation of currency. Let's say at the time you exchange your CFA in terms of dollars, there was a change or there was a drastic growth of 50 francs if you are in Cameroon, or when you wanted to exchange your currency in Nigeria, there was a change of 50 naira. In terms of when you are returning back, there can either be an increase of that value or a decrease. The decrease between that amount is known as a spread for traders, and it is known also as a profit or a loss in terms of individuals. We shall be looking at this more in our subsequent edition, but today we're more focused on stocks, bonds, and Forex. Investors, ladies and gentlemen, to become an investor, to become an angel investor, venture capital investor, to become a trader, you need to understand that the financial market is very broad. And because of the broadness of the financial market, specification strategically is very important. Knowing what you want to invest in, knowing where you want to invest in, and knowing the projects, the different institutions, the different activities they are engaged in is very important.